Hi, my name is Corey Barnes and I'm a CPA with CRG Waddill CPAs in Brentwood, Tennessee. Today we wanted to take a few minutes to talk to you about some of the recent tax law changes and specifically how they're going to impact high-income taxpayers in 2013. The most obvious way that high-income taxpayers have been affected is the maximum tax bracket has increased from 35% to 39.6%. This affects single taxpayers earning over $400,000 and married filing jointly taxpayers earning over $450,000. The second way that high-income earners have been affected is those that are in that highest tax bracket will no longer realize the 15% capital gain and dividend rate. That has increased to 20% for those specifically in the 39.6% tax bracket. A third way that high-income earners have been affected is the additional 3.8% surtax on investment income. Investment income includes dividends, capital gains, rent income, and other types of passive investment income. So taxpayers that usually have realized a 15% capital gains rate, long-term capital gains rate, and dividends rate, if they're earning over $250,000, that will bump up from 15% to 18.8%. And in fact, those that are in that highest tax bracket, we've already discussed that they have increased from 15% to 20%. So when you tack on the additional 3.8% Medicare surtax onto the long-term capital gains for these individuals, the effective rate is actually 23.8%. Last year, that same long-term capital gains would have been taxed at 15%. This year, 23.8%. The fourth way that high-income earners have been impacted is the additional 0.9% Medicare tax on income, on earned income. This affects W-2 employees, wage earners, along with self-employed individuals. Single taxpayers earning over $200,000 will be affected by this additional 0.9% Medicare tax. Married filing joint couples who earn $250,000 will also be affected by this additional 0.9% Medicare tax. And then the last way, certainly not the last, but the last way that we're going to talk about today that high-income earners have been affected is the limitations on itemized deductions and personal exemptions. For the last several years, high-income earners have seen no restrictions or phase-outs on their itemized deductions or personal exemptions. But in 2013, married filing joint couples who earn in excess of $300,000 will now begin to see their itemized deductions and personal exemptions be phased out. So we wanted to take this opportunity to kind of educate some high-income earners on how they may be affected by these recent tax law changes, and certainly if you're not necessarily a high-income earner, you're not in the $450,000 tax bracket, but you're concerned about some of the recent tax law changes and how they may affect you, we're happy to talk with you. Again, we are with CRG Waddill CPAs in Brentwood, Tennessee. Please feel free to give us a call.